Hey everyone, welcome. We just got the closing bell for, what is it, Tuesday, October 29th. Let's see how the market treated us today. And well, really, it didn't really go anywhere. That's not too surprising. That's something that we've been talking about for several weeks now. But what we've seen is a sideways chop ever since that FOMC rate cut decision, a little bit of a movement upwards when there was a change in perception as to which candidate might be having a lead in the presidential elections. And then ever since then, we've just been chopping sideways once again. The good thing is that when we look at this market, it still does look strong and it still does look fairly positive. If I look at it from a 2 to 3 month perspective, so we've got end of October, so that's 1, 2, 3. So we start looking from August, perfectly 3 month. This is looking very positive. I would call this aggressive, moderately aggressive to fairly aggressive. And then if we look just a little bit longer, it looks a little bit less aggressive because we did have that correction just about 3 months ago. And then we have this movement upwards. But either way, it doesn't really matter if I start from here, 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 start from here. It doesn't really matter. It's all up. We are at a higher place than wherever we choose our starting point. So it's just a matter of how aggressive we view this movement upwards. So there, for now, everything looks okay and fairly strong with the market. The longer we consolidate sideways, the more potential we have for a larger move. Most likely, that larger move will come after the elections. So, uh, all we can really say right now is volatility. Watch out for volatility because it's probably coming. That doesn't necessarily mean a downward movement. It could be volatility to the upside as well. So, directionality is it's sort of like an earnings event. You know that a news event is coming, you know that probably a big move is coming, but you don't necessarily know which direction it might go. We don't know if once we get some certainty, the market is relieved and it likes certainty and so it'll move upwards, or there's an upset where where recently we've gotten more likelihood that certain candidate would win, or at least in the polls it seemed to favor one candidate, and if we get the other candidate, maybe that's a big surprise and we move downwards. In either case, there's probably going to be a reasonably large movement in the sectors that seem to favor one candidate or the other. And if whoever loses, then the investments inside those particular industries that might have benefited from that candidate was most likely going to move downwards. On net, I have a tendency to believe that in the very first theory, that once we remove some uncertainty from the markets, then it's free to move upwards. Why? Because that's generally the tendency of a market. We like certainty, and so we move higher. Number two, we were in an uptrend before moving, and we are, no matter how we slice it, we are still higher than we were in any point in time in the last several months. And actually, we are near all-time highs. So it's going to be, it doesn't matter what point we choose in the past, we are on this upward trend. And there's nothing here to indicate a serious weakness that we should move downwards, at least not anytime soon. If we're looking a little bit further down the line, 2025, then perhaps we can say, well, we have the interest rates to worry about, we have treasuries to worry about. So let's take a look at some of those things that we might, that at least in terms of the broader economy and the longer term, or I should say intermediate term outlook for the markets, that may cause us to have, a little bit of concern, but probably not this year, probably not in 2024. So let's take a quick look. I can look at the VIX. VIX is still elevated, is at 19.49. We came as low as 18 point something in the past couple of weeks, but that's still quite elevated. And I've been saying in the past few weeks that I don't really expect us to get down to 15 or below until we actually get to the elections. So even if we move upwards or we flow upwards, we're not really going to see this volatility move significantly down. That's just because we're living in a time of uncertainty. Until those elections come by, that uncertainty is going to continue. One thing we can also look like is the VVIX. The VVIX is the volatility of the volatility. And that's coming down a little bit. But what we've seen is that we've gotten a little bit of a squeeze right here. So that volatility is probably going to break out one way or the other, or at least the VVIX is probably going to break out one way or the other. So either volatility can come way down or it can just skyrocket. So that converging point seems to be somewhere in this area, which is right near the elections. So it's consistent. It's painting the same story. If I look at my CPC, my put the call ratio, that's not really indicating very much at all. If I look at my bonds continue to trade sideways in the past week. We did have a little bit of a sell-off in the morning, but then we recovered. So this is sideways chop in the last 5 trading sessions. But we have been going like this. Oops. That's not what I meant to do. We have been going down like this. And that's a very sharp movement, very obvious reaction from the bond market to the FOMC rate cut. And they say, you're cutting rates? Well, not on the long end. On the long end, we're going higher. And this is going to force the Fed to continue to cut rates, because what they did had absolutely zero. It did not have the intended effect, at least not on the interest rate market. And it's debatable, it's arguable whether or not it had an effect on inflation and on unemployment. So if this continues to move downwards, what we're saying is that we're getting a lot of yield out of treasuries. So that's going to make it difficult for things that compete on yield. So tech stocks compete on yield. Small cap stocks compete on yield. Utility stocks compete on yield. Real estate stocks compete on yield. And it's going to be very difficult for those to move significantly higher if I'm getting better or similar types of yield out of the treasury market, because at least from an investor standpoint, US treasuries are still a much more stable and a much more safe investment than any of the other ones that we just named. So if we can get basically the same return, why would we go with a higher risk? You're always trying to maximize your return for the risk that you're getting. So this downward movement also has been supporting the gold markets. So if we look at gold, you can see that's been pretty much straight up. So the gold is definitely receiving a lot of interest. And Bitcoin, I believe, is starting to take off. There we go. A nice, if we start anywhere again in the last few months, we are now at an upward slope. So we've broken these highs right here that were limiting us in the past. So over the last couple of days, has started to shoot upwards. And if we take a slightly shorter time frame, like 2 months instead of 3 months, then you can see that it's a little bit more aggressive. So I'm expecting Bitcoin to continue to move upwards, gold to continue to move upwards, at least through the remainder of the year. Treasuries, we'll see if it goes sideways or if it continues to move downwards. But these assets, they're more of a safe haven. Well, Bitcoin is a speculative asset, but it does have some safe haven properties to it with the younger generation, with the people in their 20s and 30s. They are much more open to Bitcoin as an asset and Bitcoin as somewhere to park their money, while while they're uncertain about cash and uncertain about bonds and uncertain about stocks. So I'm expecting these to continue to catch a bid and continue to move higher. But most importantly, we want to look at that dollar. Okay, so dollar has been shooting up. The last few days has gone sideways. It might continue to do that into the elections, but the US dollar is the driver of many, many different prices, especially in the commodities markets, currencies markets. They're all, many of them are indexed to the dollar. So, uh, whatever happens to the dollar will definitely have an effect on commodities. It will have an effect on bonds, and have an effect on energies. It will have an effect on gold and Bitcoin. So it has far-reaching implications. So we'll want to see if this dollar continues to strengthen. If it continues to strengthen, it'll make it a little bit more difficult for foreign countries to purchase American goods. It is good for American consumers because they can generally have a little bit more buying power for foreign goods. And then there's always the question of, well, if we start introducing tariffs, like one of the candidates talks about, he wants to add tariffs, then that will have an implication on the trade between two countries. And if you have tariffs on top of a really of a weakening dollar, then that really hurts the consumer. But as long as the dollar is moving upwards and strong, then those two might offset each other. So we'll see. We'll want to keep a very careful eye on that US dollar. So for now, the S&P 500, we're just going to expect it to chop sideways. You know, earnings didn't change anything, CPI reports didn't change anything, all these different economic news, they didn't change anything. So at this point, with the elections just roughly a week away, then basically there's probably not going to be something that is going to break us out of this range, except for the elections themselves. There could be something like if someone drops a nuclear bomb or something like that, some random black swan event could knock us out of this. But anything short of that, it's probably not. So we're probably going to keep on chopping sideways until that point in time. So an interesting trade. It might be like a condor or a butterfly centered around where we are right now. So just say 583. Let's explore that a little bit. I might as well, instead of telling you guys every day we're chopping sideways, might as well give you a trade that might benefit from that. So if we go to option strat and we build let's just do an iron butterfly and just say, hey, we're going to maybe stay in this range until elections. Elections are November 5th. So I wouldn't want to go any. Why does it keep choosing the wrong ticker? I definitely wouldn't want to go November 5th or later. So let's choose November 4th and just say, hey, what if we center ourselves at 583? Let's give ourselves maybe 5 points. Let's see how that plays out. If I give myself 5-point wide to either side, then my break evens are 579 to 587. That's not bad. That's not bad. So what we're saying is, as long as we stay in between 579 and 587 by the time that the election comes around, let's see, that's the wrong, there we go, 579. I might prefer that we have a little bit more range to the downside. So let's widen that out a little bit. Let's see if we can go maybe 8. Let's go 8 wide. 5, 2, 3. Okay, let's see how that looks. Okay, so now I have break evens at 577 and 589. looks a little bit better. So as long as I stay in between these two lines, I'm going to make some money by November 5th. And it's not unreasonable. We have that EMA 20 right there. We have the quarterly VWAP right there. We have the lows of this box. Maybe at the lows they poked below, but we closed inside this region every single day for the past 2 weeks. So this is looking like a reasonable trade. And what is the max loss? $208. Max gain, just call it $200 versus $600. I have a 3-to-1 reward to risk ratio. I risk just a little bit for the potential of making up to 3 times my money. This looks like a great trade to me. So I'm going to go ahead and save this trade. This is something that you could potentially, if you chose to, put into your account tomorrow morning. It'll be slightly different, but you'll be pretty close to a 3-to-1 reward to risk ratio. So that's what that would be kind of my one, like a very nice and easy way to capture this sideways movement that we're expecting going into elections. Okay, that is going to be it for today. Basically, if I just had to sum it up, it's the same thing that I've said for a while now. Is we're basically just chopping sideways. Have a wonderful rest of your day, and I will see you tomorrow.